All right, I was having trouble, gang, with my microphone and camera situation. Okay, so I am not Deborah, as you can see. My name is Adawn Ehmen. I own a company called CPA Consultants Group, and a piece of that is taxhostage.com. We do about somewhere basically, let's say it's officially 50-50. 50% is tax resolution and the other for 50% is consulting for companies that have business challenges either in the startup phase or somewhere along the way where they're trying to scale up and they have a back office problem, some sort of financial system or something that's not working well. But today we're going to talk about taxes. So let me just show you guys my screen and we will get along on our way. So let's see, sharing my screen. All right, here we go. So basically, one of the things that we do, whether you're starting out with us in the very beginning and we're helping you avoid tax trouble, or if you come to me a long way down the road and you already have tax trouble, we specialize in this kind of service. That is what Tax Hostage does. And so really, whenever you are thinking about a business, most people, I mean, you may think about taxes, but people don't tend to think really hard about it in the beginning. And so sometimes they do get in trouble. So, what we're going to do today is I'm going to leave my experience here. You can read that yourself if you're interested later or now. And it sort of lends to both things that I just told you about. But we're going to specifically focus on taxes. So, where are you right now? Right? Are you planning to start a business? Are you in the startup phase? Are you 2 to 5 years in? Are you more than 5 years in? It's important to know where you are because you need to know what it is you're supposed to be worrying about right now, right? So, what is your tax story, right? If I asked you, what is your tax story? How are you doing? Would you say, I know what I'm doing. I've got zero tax worries. Or would you say, I've been there, done that. I've already got the scars to prove it. I wish I'd known you then. I hear that a lot. I wish I'd known you when I went through this. We paid, $100,000 and I don't think we probably should have, and so on. I'm straight, right? I'm on the straight and narrow. I'm a great CPA, whatever. I've been playing a little fast and loose. I'm a little bit worried. Hey, maybe we could have a talk and because you could look at my stuff and tell me if, it's a problem. That's pretty much most people, right? So, what's your industry? That's another thing. Certainly, when you're starting out, or even if you've kind of hit that place where you're like, man, I don't know if it's tight enough, you need to be thinking about what your industry is. Each industry has a more, whether they're more, basically, sorry, in your industry, you're either more likely because of your industry to get audited or less likely, or you're just more likely to actually do things the wrong way or less likely. Some of the industries that tend to end up in the most trouble are some of them that are sitting on this list are realtors, lawyers. Obviously, if an accountant ends up in trouble, they're in big trouble in a hurry because they expect them to not get in trouble. People in the trades, truckers, that's not on this list. Pharmacies where they're doing compounding, they tend to get up in trouble for cost of goods sold problems. Manufacturing type entities, especially if they're small, they don't tend to do a very good job in the beginning keeping up with things. And so down the road, they can either have been paying too much tax or not enough. And either way, that will end you up in trouble. Airbnb also has its own special things. Online retail, as I'm sure you can imagine, has sales tax problems. So all of them have their own kind of special flavor. But the most common tax missteps, we're going to kind of go through why people usually get in trouble and, what does that look like? Okay. So tax trouble, why does it happen? The root causes, I'm big into root cause. A lot of my background was spent in finding root causes in IT, structure, finance, back in the financial picture or in processes or people or something that we needed to fix. And in tax trouble, you have a similar thing. What is the reason that it started? And this is where you want to be looking when you're starting out, when you're trying to avoid it, right? Choosing the wrong entity for your situation. This one is one that I'm going to actually spend a little bit more time than just reading it. And that is just to say, a lot of people think they need to start with an S corp. That's the main thing I see. When you start with an S corp from the very beginning, you immediately invite the need for payroll. And the need for payroll invites multiple things. One, you either don't do it or you don't pay yourself enough as an owner, and you end up in trouble that way because there's a requirement basically around how much you need to pay yourself. And then the other thing is, you don't do payroll right. You don't pay taxes. Even if you pay yourself something, you don't pay the right taxes for yourself or your employees or whatever. And if you're a single sole proprietor, there's no reason to add payroll to the headache of your life. Not only that, you have a separate tax return, whereas with an LLC, you would not have that. Lack of bookkeeping, that happens everywhere. Bad bookkeeping, commingling funds, which means you've got your personal account and your business account and you're sticking all your stuff together, and that effectively will pierce your corporate veil or the veil of your entity, even if it's an LLC, very quickly. And then people can come after your house and your personal things. Ignorance, cash transactions, that goes to restaurants, anywhere. What they will do with that is when they see that your standard of living is higher than what you're reporting, they'll do a cash transactions audit and they will impute income to you. So if you think that taking cash keeps you from getting caught, it does not. Anyway, ignorance of compliance requirements like sales tax, quarterly tax payments, 1099s and W-2 employee rules get people into payroll tax because they pay them as 1099 because they don't want to do payroll. But there are rules about what an employee is and what it isn't, and if what they aren't. And if you pay them 1099, they'll end up in hot water. And then unskilled tax planning or preparation. And then the biggest one, of course, is assuming you won't get caught because you aren't big enough for them to notice you. So what happens, right? What happens if you get in trouble? Well, there are any myriad of all these things, higher than necessary costs of bookkeeping because you did an 1120S and you've got to do your home and you've got to have two different bank accounts and you've got to have two different tax returns and on and on. Partnerships where you've got multiple returns. I actually have a client recently who she called because she's in a big load of trouble and her whole tax case is going to cost way more than it needs to. And I mean, mind you, she hadn't filed taxes in 8 years, but it's primarily a giant bill because we have to file two tax returns for her two different partnerships because in her mind she needed to have one for her online and one for her in person, which is totally not true, but it costs her for two tax returns in addition to her personal tax return every single year. There are a lot of things here that can happen. I mean, the worst, of course, is fraud, tax evasion, criminal prosecution. That's the one you want to stay away from, right? That's if you lie to a revenue officer agent. And it also is if you get way down the road with payroll, if you do something like pyramiding, where you start an entity, you end up in trouble with payroll, and then you just let that entity go away and create another entity. That doesn't work very well. They catch you and they get very upset about it. Sales tax penalties, most of these you may already know, and certainly you can read them. But this is what happens, right? And so what do we do? How do we deal with the fallout? If you end up or are already in a place where you're not sure, you need to know what tools you have. I mean, for one, you can always call me. We're all on here together at this point. So you're going to have my information. You can call me, set up an appointment. I will do an hour consult. If any of you are already feeling like, great, I need to have a conversation, that's totally fine. We can do that. But the tools that I have at my disposal, some of them you have at your disposal, right? So if you're in trouble and you've received a letter that says you have a lien or a levy, you either have a collection due process hearing form that will come with a letter that says, intent to levy, final intent to levy. It will also have this 12153 form in the back. If they say that they've put a lien on you, you have a right to a cap appeal, which is form 9423. And obviously, if you haven't filed returns in the past and they say that, check it out, we've decided you owe money, you need to file a substitute for return, because by and large, the likelihood that they've given you all the deductions that you're entitled to is slim and none. So you need to go back and file an original return on top of that substitute for return that they filed for you. If you're missing prior year information, there are ways to figure that out. There are ways to come up with what your numbers should be for your expenses and things like that. And even like the 1099s that you received or whatever, we go look at your wage and income transcript. You need to know that you have the ability to get a first time penalty abatement. You need to know that you have the ability to try to go for reasonable abatement on penalties. Amended returns. Obviously, the one that most people have heard of is offer and compromise. Right now, actually, they are closer to, they were at like about 30% acceptance rate, which of course accounts for people also that just sort of throw something against the wall, which is not a good plan, by the way. Please, please, please don't go just throw something against the wall if you're already in tax trouble, because the thing that will happen is, yes, you can apply again, but they see everything that's happened. And so they tend to hold it against you, right? That you have already done an offer, and they either are thinking, well, you're just trying to delay. And in that case, they can literally just reject your offer out of hand, or they think that you're not legitimately trying to make a decent offer and you're wasting their time and you're wasting government money, and they can reject you for that. So you want to work with somebody who knows what they're doing and can structure your finances well, the best possible way. Obviously, no lying, no doing things that are ridiculous, but there is some structuring that can happen before you make an offer. And this obviously is best done before you get a levy and you're in a big fat hairy hurry, because you only have 30 days or something less before they slap you with a levy and freeze your checking account and you can't do anything. So obviously these others that are here, installment agreements, currently not collectible. The Form 1144 is important for business owners. It's very important because they're not going to tell you. If you have someone show up at your office and they start asking you questions about payroll liabilities, they're not going to tell you why they're interviewing you, but you need to cut it off and tell them that you're hiring a representative and that you need to talk to them before you're going to answer any questions. And the reason for that is because they're typically, what they're doing is they're filling out this Form 1144 and they're figuring out how to assign responsibility. And they will do it to people who really, in our minds, we would never think that they should be responsible. They've assigned responsibility to, probably the most famous case is when they assigned it to a barmaid. And that's too much for our time now. I can't explain all of that now, but trust me, you don't want to answer the questions when they come. So you need to get a representative to help you with that. Tax trouble, how long can you be in it? The assessment statute is, we refer to it as the ACED. That is typically 3 years from the tax return file date. So think about that. If you don't file a tax return, there is no assessment statute. So they can just, they've pretty much got forever if you don't file, right? Not only that, but not filing is actually a crime. I don't know if you knew that or not. Collection statute is 10 years plus tolling after you have already been assessed. So of course the ACED has to come first, and then they can collect for 10 years plus tolling. Tolling is when you file for an installment agreement or an offer. If there are time periods where they're not allowed to collect from you, that's the tolling part. So it's 10 years plus whatever that is. And then the refund statute, as we all know, stinks, right? 3 years, right? They get forever, but you get 3 years. And then I don't know why I'm now showing you this. I'm a little confused. But anyway, so how long do you have? I already told you that. I really wanted to. Oh, no statute of limitations on fraud. That's another one. No statute of limitations on fraud. Very important. Obviously, so you guys may not know this, but it does switch. So when they're auditing you, or when you're having to prove deductions, all of that, the impetus is on you. You have to prove it, right? The burden of proof is on you. If they refer you to CID, Criminal Investigations Division, then the burden of proof is now the government's. So it does make a difference. It does make it harder to prosecute someone for fraud, but it's not impossible, and you need to be very careful. And if you think that you're going to have questions asked of you that may implicate you for fraud, or if you're just worried about them running down that road, you should get a representative, because once you have a representative, which is what we do, you don't talk to the IRS anymore. The representative talks for you. They stand between you and the IRS. And then the last one is questions. Do you guys have any questions for me? Questions? Yay, taxes. Yeah, I know, right? I'm jealous. That's nice. Yay, taxes. I know it's not the best subject, right? But it's important because it can ruin your life. It's important to know that you need what you need to do to start with to keep from getting in trouble. And then if you're already in trouble, it's important to know somebody that you can trust that will actually take care of your case and not just take your money and throw something at the wall. Anyway, and the last slide is just my information. If you want to screenshot it and hang on to it, or better yet, you can always text the word hostage literally to just dial not 2100, and then in your text messages, you just type hostage, and then you can save what comes to you. You can go to it and save the contact information, kind of keep it as your AAA for tax resolution problems in your pocket, and you can always call and set something up with me. Anyway, thank you guys. And I do Canadian taxes? Pamela, I do not do Canadian taxes unless you're an expat that lives in Canada. Canada. I do taxes and tax resolution for expats out of the US, but I specifically focus on US taxes and state taxes other than New York and California. I have very close peers that I refer people to for California and New York. Anybody else? I don't see any other questions. Well, hopefully this helped you guys. I know it's very fast, but I wanted to kind of hit what do you look for and what can you do to stay out. And I mean, you can set up a consult with me anytime. Like I said, if you get my contact card, God, I can't talk. If you get my contact card, you can set up a consult with me and I'll walk you through anything you need to. It's an hour long. We can just chat. I don't mind doing that at all.